My name is Tracy Collins. I am the owner and founder of Virtual Bookkeeping Pros. Virtual Bookkeeping Pros is much more than just a bookkeeping company. We work with our clients to provide guidance and insight into the areas of their business, such as stability and growth, how to reach their goals and set goals, what strategies to follow for their business, how to make their business profitable. And we also do bookkeeping for your taxes. You can visit our website at virtualbookkeepingpro.com to schedule a discovery call. So today I'm going to discuss with you why bookkeeping is for more than just taxes. So bookkeeping is just for taxes is one of the biggest things that I hear from so many people. And that is just not true. It is one of the things that you need to have, one of the reasons you have to have bookkeeping, but bookkeeping will also tell you stories. It will tell you where your business has been. It will tell you where your business is right now, and it will tell you where your business is going to go from now. So there are several questions that good bookkeeping can help you answer. And this is a big one. Have your expenses increased? And are your prices keeping up with your expenses? Can you afford to hire a new employee? If so, what do you think you can pay them? I mean, right now the going rate is about $15, at least $15 an hour, but depending on your area of expertise, it's going to end up being higher. And you need to make sure that you can help them, or you can make sure that you can pay what you decide to pay them for a year or every week. Should you purchase the equipment that you want to buy on credit, such as a loan or a credit card, or should you pay for it outright? Remember, cash is king. So you have to make sure that whatever you decide to do, that your cash flow will not be impacted too harshly. And then why does it feel like you may be killing it in sales, but yet you can't make ends meet? These are 4 really good questions that having a proper bookkeeping system and proper bookkeeping done can help you answer. I have seen many businesses that have, almost $1 million in sales or more than $1 million in sales. But yet they have to file bankruptcy or they have to restructure their business because of one reason or another. Maybe they grew too fast. We'll go over more of that in the next slide. 20% of businesses fail during year 1. 45% of businesses fail during the first 5 years. 65% of businesses fail during the first 10 years. We don't want you to be a statistic. So why do businesses fail? Well, one of the top reasons is because their bookkeeping is just not up to par. But maybe they're not paying attention to their financial books. I've seen it where they've taken the word of their bookkeeper or their accountant that everything is fine, there's no issues, they can continue on their way the way they're doing it, and then they're not looking at the information themselves, and then once it's too late, they're realizing that things weren't fine. Maybe they have an incompetent bookkeeper. Unfortunately, I see this all the time because so many people feel that bookkeeping is just data entry when it's not. There's so much more to bookkeeping than just data entry. Maybe their business is growing too fast and they're not able to keep up with the expenses that go along with their business growing too fast. And they didn't know that they needed to increase their prices. That goes along with the business growing too fast too, because if you hire more and you grow more, you have higher expenses. So you need to make sure that there's a balance between your revenue and your expenses. Or they were using the business as a cash cow and not keeping their personal separate from business. I see this all the time. what people are doing is they are just using their business money as if it's their own personal checking account. They're using it to buy clothes. They're using it to pay for Disney Plus. They're using it to pay for trips for the family. They're using it to pay for, Apple Music, all kinds of different things. That is a big no-no. And that all of those things that they are purchasing, that's personal, that is not business related, adds up quickly, and it can cause a lot of cash flow problems. So how can you avoid being a statistic? Well, first of all, you want to make sure that you keep your bookkeeping up to date, at the very least monthly. Make sure when you do get your bookkeeping up to date, you take a look at the financial reports. It's more than just numbers and letters. It does tell a story. If you don't understand that story, then you need to find a bookkeeper who can help you understand that story. Understand what your business KPIs should be. KPIs are key performance indicators. For example, you need to have a gross margin of at least 30%. Anything less and you won't be able to sustain your business. And then get yourself a bookkeeper that understands your business, understands all the software that you use, and meets with you monthly, quarterly, or at the very least yearly to discuss what is working in your business and what isn't. Thank you for your time. Again, my name is Tracy Collins. I am the owner and founder of Virtual Bookkeeping Pros. We want to help your business grow and go where you want it to, and help you have peace of mind that you are financially stable. So please visit our website at virtualbookkeepingpro.com and schedule a discovery call.